poring over these, it looks like there's not consensus. That's clear and evident. A number of Fed officials stressing the need for flexibility. A couple favored 50 basis points cut, but several thought no cut at all was necessary in July. How are you taking on the intricacies of the minutes?
Well, the important distinction to really make here is that in the past, the Federal Reserve has always looked at domestic U.S. data to drive their decisions. And in the last meeting, they noted global uncertainty and muted inflation as the reasons for the rate cut. So going forward, it'll be interesting to see, will they cite more of the U.S. economic data, which is actually quite strong, consumers are doing quite well, or if they'll cite global uncertainty, which has really no indication of slowing down.
So is the idea here, though, when we hear these words, sort of ongoing reassessment and that type of language coming out of this meeting, they're essentially talking about what most people in the market think was a policy mistake back in December. Is there some sense here that the Fed thinks that maybe that wasn't a policy mistake?
Well, what the Fed is really looking at here is they're trying to make the distinction of, okay, the labor market's at historical lows, but meanwhile, we're starting to get some uncertainty in the global markets, and inflation is right around target. And so they're really just trying to measure, those two things coming together and wondering, is the U.S. economy doing well, and does it need any more stimulation? Do we need to keep this expansion going?
It's interesting that a number of the Federal Reserve FOMC committee were worried about the inversion of the yield curve. How much of you, as the chief economist, of course, deputy chief economist, looking at the yield curve and whether or not is a real signal that we could be heading towards a recession here in the U.S.?
So yield curve inversion and recession is really more of a correlation, not a causation. Surely in the past, a yield curve inversion has preceded a recession by 1 to 2 years. But the distinction here is that the yield curve was already flat to begin with. And a lot of that was purposeful on the part of the Fed with the quantitative easing program. And there's also an increasingly global economy, which has made, a flood to safety in our bond market. So the yield curve was already quite flat. And so an inversion, it's easier to go from, flat into an inversion. And so we're not necessarily seeing that as a strong predictor of recession, especially as U.S. fundamentals continue to look extremely strong.
And when we talk about U.S. fundamentals, Odeta, are we pretty much just talking about the consumer side of the equation? Are we talking about the business side of the equation? Or are they both sort of intertwined here?
They're always intertwined, but certainly 70% of our market is consumer driven. And right now we just got retail data in this week. Retail is looking extremely strong, which means that consumers are spending. And more importantly, what I'm watching here is really jobs report. We're still at 50-year low unemployment rates. Wage growth continues to go up. So as long as the consumer feels strong and is spending that money, we are in a consumer driven expansion. And that's really what I'm watching in terms of fundamentals.
To a certain extent, these FOMC minutes are dated on their release. The fact that so much has happened after the 31st meeting and the announcement, the fact that we've got a ramp up in trade tensions, and that we're all looking to now Friday in the speech from Jay Powell. What will you be expecting from the meeting over in Jackson Hole?
The Jackson Hole meeting is really more of an academic conference, so we're not looking for a lot of policy recommendations to come out of that meeting necessarily, but the markets will be looking to see if there's any dovish or hawkish language coming from the Federal Reserve to indicate whether this is really an easing cycle or whether it was kind of a one-off insurance cut.
Do you think the U.S. economy needs fiscal stimulus at this point?
Well, again, I'll be watching that jobs report, and I think if we see a couple more positive prints looking at a healthy consumer, then I'll kind of take it from there.